Hello my dear friends, whenever you purchase something, have you noticed your friends will come and tell, "Hey Prashant, if you have purchased from this place, your deal must have been good." Same way, whenever I file tax, my auditor says, "Hey Prashant, if you would have availed tax exemptions like this, you could have paid less tax." If you feel the same way, you should watch this video because I am going to tell you lot of tax avenues where you can save the taxes. At the same time, I also tell you tax planning is not tax avoidance. By paying tax, we should be proud of because we are contributing to the nation building. Army, Navy, airports, infrastructure, bridges, dam, all these taxes are going to be utilized for the welfare of the country. Yes, with this my dear friends, I am going to tell you Tax Planning Simplified. I am Prasad Vedagar. Please do subscribe, comment and share. If you got any doubt, please put it in the comment box. I will come back to you. At the same time, my dear friend, watch this full video of 21 minutes which will definitely help you to plan your taxes better than ever before. Hi friends. So, Tax Planning Simplified. So, in this tax planning, we are going to see the avenues where and all you can save the money, right? So, savings for tax planning allows you to not just save tax or investing your money for growth, but it allows you to have financial freedom in future. See, here I would like to clarify what is financial freedom. One is that you are earning money and then spending everything. It is called splurging. Other one is that you are earning money, not at all spending, being stingy, conjuice, you are not spending. So that's also bad. But financial freedom is what? I will spend with the mindfulness. So by this tax planning, by saving, you are going to have financial freedom. You can control your spending. So with this thought, we will see what is tax planning is. Yes, we should know tax slabs, old versus new regimes. There are two regimes, my dear friends. One is that old tax slabs. Here it is up to 2.5 lakhs, nil, 2.5 lakhs to 5 lakhs, 5%, 5 to 10 lakhs, 20%, 10 lakh and above 30%. New tax slabs allows you 2.5 lakh, nil, 2.5 to 5, 5%, 5 to 7.5, 10%, 7.5 to 10 lakh, 15%, 10 to 12.5 lakh, 20%, 12.5 to 15, 25%, 15 lakh and above 30%. But there is a catch. In new tax slabs, you cannot avail any tax exemption except a few. But in old tax slab, old is gold. In old is gold because you can avail tax exemptions. You can also save money. By having tax exemptions, you are going to save yourself compulsorily, which will make you richer and wealthier and happier. New tax regime is for those who don't want to avail any tax exemptions. So it is for the people, say for people those who are 65, 70, ideally, I am just telling you for example. So they have done everything in their life, they want to have only enough money for day-to-day purpose, they can have this new regime. So government is giving flexibility for you to have which scheme to adopt, but I recommend adhere to old tax slabs for the people those who are earning, so that you can have lot of tax avenues, tax saving avenues. Avenues for tax exemptions. So it is a kind of a jigsaw puzzle, my dear friends. In this jigsaw puzzle, one puzzle can be bigger, another one smaller. Then it allows you, there is lot of avenues are there. You can just mix and match and then fix it and then make your own pie. So that's how it is. Principles on number one, principles of housing loan. Second, PPF and EPF, interest on housing loan. Let's see what comes next. Health insurance and mediclaim, life insurance, and then standard deductions. Yes, government is giving standard deductions to you. Then national pay, NPS, national pension, new pension scheme. Then ELSS, equity linked savings schemes, HRA, house rent allowance, tuition fee. So likewise, you can have n number of tax avenues. These are all the tools, avenues are available. So according to your need, you can make it your pie. You can make it certain portion higher, certain portion lower according to your need. Then make it as a very good tax bouquet. Okay, so tax exemption bouquet. Let's see which are all the tax exemption available and what under what sections. Tax saving IT sections. So very important to know which are all the sections allows you to how much tax you can save. Maximum 1.5 lakh. This is the most popular section, that is 80C. So in this 80C, ELSS, PPF, FD, etc. you can have it. Then 80CCC, 80CCC, here you can have insurance policy premium and then pension products. 80CCD, new pension scheme and Atal Pension Yojana. So put together, so you can have it in any mix and match, any ratio. So put together you can have maximum of 1.5 lakhs tax exemption under this 80C, 80CC and 80CCD. So one of the best utilized one, and still many people are not utilizing this 1.5 lakhs also. So how to utilize that one we will see in the later part of this video. Now in this video we will go to the next session. 80CCD new pension scheme. It allows, in addition to 80C's 1.5 lakh, here another 50,000 rupees you can avail as a tax exemption. Next is that 80D. 80D is a very big section. People are thinking that only Mediclaim. I will tell you in the next slide how you can manage your 80D and then which are all the sections are available, how you can have more options if you got a parents. That I will tell you in very detailed manner. We shall see in the next slide. And of course, 80C is the 1.5 lakhs is the most useful one. This one also we will see. I will recommend some of the investments you can make as insurance policies in the later section. Subsections under 80D on health grounds. 80D क्या होता है? Medical insurance for self, family, parents up to 1 lakh. I will tell you how the breakup of 1 lakh you can make it. And then 80DD, medical treatment for disabled dependent. My dear friends, these are all the very rare sections. Some people might be wanting to know how can I save the tax for the disabled dependent. Yes, up to 1.25 lakhs max you can avail tax exemption under 80DD. Then 80DDB, treatment of ailments and diseases, particular diseases up to 1 lakh rupees. Then 80U, even if the assessee himself is a disabled person, he can have maximum of 1.5 lakhs tax exemptions. These are all the very rare tax exemption people know. Just people know only 80D for Mediclaim. So these are all the subsections you can have available in order to save tax for the special cases like disabled dependent, treatment and ailments of some diseases, not all diseases. Then physically disabled assessee. So if any of the persons who are watching this video, they can avail this, and then they have got doubt, they can visit or call me. Then 80D option limits. As I said earlier, 80D option limits, you can have a lot of permutation and combination. Here, my dear friends, individual parents, individual and parents, the first case is that individual and parents below 60 years. It means what? For self and family 25,000 you can have Mediclaim. Then parents also below 60 years 25,000. Total put together deduction under 50,000 you can avail. Individual and family below 60 years. This is the most of the cases. Individual and family are below 60 years, but parents are senior citizens above 60 years. Here you can avail for self 25,000 and then parents 50,000. Put together 75,000. In some cases, senior citizens themselves or assessee themselves is a senior citizen. Both individual, family, parents or above 60 years, then 50 years for self and family, 50 years for parents, then total 1 lakh rupees. Then members of HUF, it means they can also have 25,000 and 25,000. So deduction they can claim 25,000 only. Non-resident individuals, the NRIs, they can also have 25,000 for the family, then 25,000 for the parents. So these are all the options, my dear friends. So please go through this video again and then you can take screenshot and come back to me if you got any doubt. Tax deduction for loans. Yes, my dear friends, if you take loans, then also tax deductions are available. So which are all? 80E. Under 80E, interest payable on education loan. Suppose if your ward is going to college, higher education, if you are taking loan for his BTech degree, interest payable on education loan is absolutely the entire amount of interest is taken. In case of it is housing loan, it only 2 lakhs. Here you can include the entire loan, whatever the loan you are taking, no limit in it. In section 24, here interest on housing loan, as I said earlier, maximum 2 lakhs rupees. Other deductions, interest 80TT A, 80TT B. What it says? 10,000 interest on deposit. Suppose if you got a savings account or deposits on which you are earning 10,000 rupees. Okay, up to 10,000 rupees, there is a tax exemption is there, and for senior citizen it is for 50,000 rupees interest on deposits for senior citizens. Donations, if you make any donations for charitable trust or political parties or scientific research, the entire amount is set off as a tax deduction. Paying rent, here paying rent in case no HRA, if you don't have any HRA in your salary slip, maximum of 60,000 rupees can be set off as a deductions, okay, exemptions. Maximizing savings under 80C. My dear friends, as I said earlier, this 80C is the most popular one, but for youngsters, those who are newly joined from 25 to 35 who don't have any housing loan, these sections are not basically fully utilized. The government is giving 1.5 lakhs, my dear friends. We have to utilize it. You have to save early. So reality check is that under EPFO rules, the employer's monthly contribution is restricted to a maximum amount of 1,800. Even if the employee's salary exceeds 15,000, the employer is liable to contribute only 1,800 rupees. It means your basic may be, your salary might be around 1 lakh rupees, but still many of the employees, I would not say all of them, many of the employers keep their basic pay, employees basic pay 15,000 and then they contribute 12% on it. So this 12% comes around 1,800 rupees. So balance you will be contributing around 1,800. So that is the 80C limit, and then you don't have, many people don't have any other savings. For those people, I would suggest some of the best plans available with LIC of India, how they can attain financial freedom. So best options under 80C is that, first thing is that insurance plans. So you can take ULIP plans, pension plans, and then whole life plans and money back plans. These are all the very basic, my dear friends. So if you take these ULIP plans, you can attain financial freedom. At times these plans are better than any of the other equity plans available also, because it gives insurance as well as savings also. How I would tell you. Yeah, ULIP plans. LIC's ULIP plans SAIP, Systematic Investment and Insurance Plan, is available. In this plan, this has got a least expense ratio. It means for the fund management, the LIC of India takes only 1.3% only. Generally, across the board, mutual funds are taking 2.5 to 2.7% as expense ratio. This is only half of it. Second, this SAIP gives you, in addition to market related growth, it gives you a guaranteed addition. Every 5 years, 5% is added as guarantee addition. Then Return of mortality charges. Some people might be saying that this whatever the money is given for insurance purpose, that is some allocation charges for mortality charges, that is going waste. But LIC has come with the innovative plan. Here mortality charges also returned. If a person is alive and mature, policy is maturing, so if he is not dead, naturally this mortality charges is paid back. If the person is not alive, the total sum assured plus whatever this NAV rate, that will also be given. So it is a win-win for the family. Then LIC's contra investment policy, this contra investment strategy we can say. In this contra investment strategy, what will happen? LIC, whenever the stock is going down, that time they will purchase it. Now here today 27 February 2022, most of the stocks are going down because of the Ukraine-Russia conflict crisis. Now LIC will purchase the beaten down stocks, all the good stocks which are going for the very good value, and then when it comes up, LIC will sell. Then that is how the profit is made over the years. And LIC invest only in BSE 200 and NSE 200 stocks. That is the top 200 companies only LIC is investing, not in chota mota company or any penny stocks. They are not investing. LIC investing only BSE 200 and NSE 200 stocks, so which are basically fundamentally very strong companies. Then all the above put together, 65 years of trust, and then the experience we have got in Indian markets like no other fund managers we have got. So best fund managers available. So with these qualities, definitely this SAIP is going to be one of the best investment plan for you, which will ultimately give you, as I said earlier, financial freedom. So my dear friends, go for this SAIP plan, right? You can have all the benefits of the stocks and equity market. Not only equity market, my dear friends, these investments are also made in debt markets and government securities. You can always switch from one sector to other one by going into the debt fund, balanced fund, and then growth fund, bond fund kind of a thing. So you can switch 4 times in a year with the best fund management experience available. Definitely there is going to be a handsome maturity amount in the hands of you in the years to come. And moreover, one more thing I have not included is that it is absolutely tax free under 1010D if your annual premium is less than 2.5 lakhs, right my dear friends. So go with SAIP plan. It's very useful for the young, middle age, and then older people. In addition to that, we have got a pension plan. We have got a pension plan. One of the best pension plan LIC has got. That is, top picks are Jeevan Akshay. Otherwise, you can make a corpus by building big corpus. You can have pension at a later date. We have got one plan called Jeevan Labh. So we will see pension options. How you can have pension in a later date. Basically, it is to build a corpus, my dear friends. I will tell you how. So immediate pension, for the immediate pension, if you got a lump sum investment, if you are able to do, then from next month onwards you will be having pension. Second is that if you don't have lump sum, do not worry, you can build corpus over the years by taking LIC policy. Third is that tax-free pension with a lifetime insurance guarantee. That is called, we have got one plan called Jeevan Umang. We will see. Lump sum, for immediate pension, what you have to do? Lump sum investment. Then Jeevan Akshay is the plan, lifetime guaranteed interest rate. Even if the interest rate goes down to 2% or 1% in future date, yes, it might happen, it may happen, my dear friends, because in 2000 we had a bank interest of around 14 to 15% or 14% of those days. PPF have got PF got 14%, but we were providing only 12% for immediate Jeevan Akshay plan those days, 12 or 10%. But we continue to provide a promised interest rate even today. So Jeevan Akshay, by seeing today, around 6% interest rate we are providing. In Jeevan Shanti, even it goes up to 6.5% or 7% if you defer it. But whatever the interest rate is promised, LIC will continue to provide you throughout your life. That is Jeevan Akshay and Jeevan Shanti, my dear friends. If you got a lump sum amount, if you want a pension, especially senior citizen, I am appealing you invest in Jeevan Akshay. Second is that if you don't have money, those who are still working, so for them you can build a corpus. Simply I would say, if you got a 1 crore corpus, you can have at a future date somewhere around 48,000 rupees as your pension, taking interest rate as 6% for senior citizens. Then low premium, you have to build your corpus, my dear friends. If you got 1 crore rupees, you can have 48,000. If you got 50 lakhs, you will have 24,000. If you got 12 lakhs, 12,500. 12,500 will be your pension. But if you don't have any money, zero will be your pension. So it is better to build your own corpus. Life has to be planned in stages. For the next stage, you have to plan. For those who are in 30s and 40s, you can plan your retirement and build corpus by investing in LIC's Jeevan Labh plan. In this Jeevan Labh plan, you will be paying less premium than sum assured. Generally, the sum assured is the risk cover. If it is 10 lakhs means you will be paying somewhere approx 10 lakhs rupees as premium. But here in Jeevan Labh, you will be paying considerably lesser amount of money as a premium put together in the whole premium payment period. For instance, it will be somewhere around 7.6 to 8.25 lakhs, depend on the age, but generally it will be lesser. So for a 16-year term. So in this Jeevan Labh plan, it allows you to build corpus, right? In this, if you build big corpus, definitely you can, at a later date you can invest in a pension plan, and that from that pension plan your pension month on month will be coming like this. Then you have got a tax-free pension with lifetime insurance, that is Jeevan Umang. Tax-free pension means we will be giving survival benefit for lifetime basis for guaranteed 8% for lifetime. And then you can also nominate somebody, that nominee gets the entire insurance money for as and when demise occurs. So suppose a person taking insurance who is 45 years of age, at the age of 60, you will be start getting survival benefit 60, 61, 62, 63 and so on. Suppose if that person expires at the age of 95 or 99, his nominee will be getting a huge corpus. How? Because the bonus is getting added even after policy is getting matured, and then while the premium payment also you are getting on bonus. So it is a fantastic plan, my dear friends. So if you got lump sum amount, you invest in immediate pension plan. If you don't have lump sum, if you want to create a corpus, then you can have, you have got two options. One is to create your own corpus by taking LIC's Jeevan Labh plan, create a big corpus. Then third, you take Jeevan Umang plan, which gives you tax-free survival benefit as on date under 1020 it is tax-free, and then nominee also get a huge estate. You are creating an estate for your nominee. So that's it, my dear friends. With this, I am just signing off. If you got any doubts, please do come back to me. I will suggest you which plan to take. Thank you very much. Bye-bye.